Are REITs, real estate ETFs, and crowdfunding platforms a better way to be a landlord than actually owning a rental house? I don't think so. I'm Tony, and this is Real Estate Investing and Landlord News. All right, so I have an interesting article for you today. Well, it's actually part two of an article that I just covered, okay? And it was the story of these Sacramento landlords who basically got completely screwed over by these professional tenants who, just took advantage of them, and they ended up having to sell the property because they were taking such huge financial losses, okay? And, it's a horrible story, and I hate covering this sort of topic, right? But the story was basically two stories in one. What the first was the part of the story of these landlords, and then the second part they were recommending three different things to do rather than owning physical real estate in order to invest, right? And while I am not 100% opposed to these other ways to invest in real estate, I personally believe that owning rental property is the best way to make wealth. Okay, and I'm going to tell you exactly why I believe that as I go through the second part of this article. Okay, so before I get into the article, go ahead, hit the like and subscribe button, maybe leave a comment down below. Let me know what you think. So, do you think that owning physical real estate, being a landlord, renting properties out that you actually own, do you believe that is a better way to invest, or do you prefer investing in REITs or syndications or in ETFs, or investing in real estate some other ways? I know some people who think that lending money, like being a actual lender, is a better way. But I mean, I'm not saying my way is the best, but I am going to give you my opinion of those other options as we go through this article. So let's get into it. This article is coming from finance.yahoo.com, and it's part two of the article I read just yesterday. And it says, "This is just theft. Sacramento couple fall prey to serial squatters who refuse to pay rent for 9 months." And then it says, dash, three better ways to invest in real estate without the trials of being a landlord. And like I said, the three better ways, to invest in real estate are what I'm going to be going over today. So let's get into it. If the risk of serial squatters and the other trials and tribulations of being a landlord don't appeal to you, here's three ways you can invest in real estate without all the hassle. Real estate investment trusts. Investing in a real estate investment trust, or REIT, is a way to profit from the real estate market without having to buy a house or worry about screening tenants, fixing damages, chasing down late payments, or even facing intruders. REITs are publicly traded companies that own income producing real estate like apartment buildings, shopping centers, and office towers. They collect rent from tenants and pass that rent to shareholders in the form of regular dividend payments. Essentially, REITs are giant landlords. To qualify as a REIT, a company must pay out at least 90% of its taxable income to shareholders as dividends each year, in addition to other requirements. In exchange, they pay little to no income tax at the corporate level. Generally, REITs are described as high return investments that provide solid dividends and the potential for moderate long term capital appreciation. Also, as REITs are publicly traded, you can buy or sell shares anytime, and your investment can be as little or as large as you want, unlike buying a house, which usually requires a hefty down payment followed by a mortgage. And I don't mind REITs, right? To me, REITs are I don't consider them to be as good of an investment as actually owning a rental property. And there's a couple of reasons for that. The first thing is you don't get the tax benefits that you would from investing in real estate. Okay, so when you are actually physically investing in like your own rental properties that you own, there's so many tax write-offs, like depreciation, just as an example, that you get on top of the rental income that you're going to get. So like I tell everybody, hey, there's so many different ways that you make money. You make money off of appreciation, you make money off of the tax benefits, you make money off of the cash flow. So yeah, there's multiple ways that you're making money when you actually own a physical property, and you don't get the benefits. Oh yeah, and I always forget the debt pay down. So you don't get, yeah, you don't get the benefits well, like the debt pay down. You can't really, well, you can borrow money in order to buy REITs, right? But most of the time you're not going to be doing that. Okay, so you're not going to get the benefit of debt pay down, you're not going to get the tax benefits, and you are going to get the appreciation going over time, right? So that is included, right? But when you think about it, it's just like, I prefer actual rental properties because you are just making so much money on top of the cash flow that you're getting. And the cash flow that you're getting off a regular rental property should be a lot more than the dividends they're paying out. Now, keeping that in mind, I actually own REITs, okay? I own 100 shares of Invitation Homes, right, which is one of the largest single family home REITs. I think it is the largest single family home REIT in the entire country, and I own 100 shares of American Homes for Rent, which I believe is the second largest single family REIT in the entire country. And they own something like 40 or 50,000 rental houses, right? And they're all single family homes. So, I it's not that I'm opposed to them, but I don't see them as my long-term investment strategy. I put money into those REITs basically as I'm holding it until I'm able to buy more physical real estate. Okay, but like I said, I still believe that owning the physical real estate, because it offers all of the advantages, whereas owning a REIT only offers some of them. The physical real estate blows it away in terms of the return on investment. Real estate ETFs. Another easy way to invest in real estate without having to pick and choose which stocks to buy and sell is through exchange traded funds, ETFs. You can think of an ETF as a diversified portfolio of stocks. And as the name suggests, ETFs on major exchanges trade on major exchanges, making them convenient to buy and sell. Some ETFs passively trade an index, while others are actively managed. They all charge a fee, referred to as the management expense ratio, in exchange for managing the fund. And when you're talking about real estate ETFs, most of the time what they are doing is they are ETFs that own a bunch of different shares of REITs. Okay, so we're going back to the first thing, the thing that I just covered, REITs, right? So imagine an ETF owns 30 different REITs, and that way you get a more balanced portfolio. You're not just up and down, like the market could be up and down really hard on a single REIT, right? But you have a more balanced, but the rate of return is not going to be as good as that from a single REIT. But you're going to also run into the fact that, hey, a lot of these ETFs are invested in areas or in companies that I didn't want to be invested in. So, like, for example, right now the office market for or not multifamily, but commercial real estate, the office market is really struggling due to all of the people who basically are working from home now. So if you are invested in a REIT and it has a lot of the or I'm sorry, invested in an ETF and it has a lot of REITs in it that buy office, well, you could really be just struggling right now. And the same for like retail, right? A lot of the retail is struggling right now, malls and etc. So I don't want to own a lot of that. So I want to be able to pick and choose exactly what style of investment I want to do. I'm big into single family and multifamily residential, and that's the only thing I want to invest in. So that's pretty much what all I own, and that's all the REITs that I want to own. So yeah, I'm not super big into a lot of the ETFs out there, but I feel like it's a little bit safer way to invest money, but the return is not like the return on ETFs, the returns on REITs is not going to even be comparable to what you get. And here's the reason why, right? Leverage. Every landlord who gets a mortgage is using bank money in order to buy a property. And a lot of the times we're only putting down 20 or 25, maybe 30% of the actual purchase cost. but we get 100% of that appreciation. And that is huge, okay? That's what makes people extremely wealthy who own real estate. And that's part of the reason, too, why, it blows away investing in REITs, it blows away investing in ETFs or stocks or any of that stuff, okay? And then it talks about crowdfunding platforms, right? And, I'm not going to read that little section about the crowdfunding platforms, but here's the thing that I just consider a crowdfunding platform to be similar to a syndication. So basically, in a syndication, you have a single principal partner or whatever, right? And then you have a bunch of people who are pooling their money together in order to buy a more expensive property. For example, a large apartment building that costs like $50 million, right? And you need 25% to put down on a $50 million property. A lot of people don't have $15 million, or what would that be? I'm sorry, $12.5 million to put down. Sorry, my bad math. But if you pool all your money together, between 100 people, yeah, you might be able to get $12.5 million. And then, you'll be able to buy this large property and so get professional property management up in there, get people who know how to bring the rents up to make the thing appreciate, and you can get a great rate of return. But the reason I don't like that sort of investment, one, it's limited to accredited investors. I am an accredited investor, but I don't want to do it because I like control. I am a control freak. Okay. I want to be in charge of everything. I want to be the one who picks out the property management. I want to know where every single penny is going. And unfortunately, when you're doing that sort of thing, you're pretty much sitting as a passive investor. And that's the real thing behind me not liking these other options, okay? Whether it be a REIT, whether it be a real estate ETF, or whether it be a syndication or a crowdfunding platform. You lose the personal control. And me having control is, it's 100% necessary when I'm investing, okay? Maybe things will change in the future. I'll want to retire and you take it easy. But as of right now, I like to have that control because it gives me options and it provides me with a very, very high rate of return versus no control and getting a much lower rate of return. So anyway, put down in the comments what you think of these other options and what other options you may use to invest in real estate, and if you think it's better than actually owning rental properties.